Is XRP a scam? Is XRP a con? Well, according to this person, Jim Cramer on CNBC, XRP is something you should stay away from. Listen to this and I will show you exactly why he is wrong and why you should not listen to random people online. Watch this and try to enjoy because he thinks XRP is a scam.
The problem is everything everyone says is true about this except for it's just a giant con. And remember, the con is not, it's not blockchain. Blockchain's great, but we keep conflating blockchain with the con. And I don't know how that can continue. I mean, this thing, all these different prices, like we put up XRP and Solana and Dogecoin. Those are all, I believe, cons. Yeah. I mean, why don't we just put up like a bunch of stocks that are valued at the same size? So I'm tired of the con. I thought you guys did a terrific job. And I love I love blockchain, but it has nothing to do with what happened. That's like saying, you know, I really love the fact that we put up cryptocurrencies. There's nothing to love. Technology's good, but it's. I mean, if we think that the XRP slash USD coin is something that we should be following, well, I mean, we should be following. We should put up like Rent a Runway and Stitch Fix up there. I mean, you know, honestly. You know, let's put up
those CEOs on too, I guess.
I don't know. Let's put up Sienna up there. I don't know. I mean, I just find it's just a random group of things that we put up, and that I question that because I'm busy trying to find how to make money from people, and I don't want to try to figure out how to lose money from people.
Well, I'll tell you what we've been watching.
I've lost money. I've had some bad ideas, but I don't put them up there every 5 minutes.
Well,
Now he thinks that XRP is a con and it is a scam, and this XRP right here is not, and you should not listen to this person right here. He is absolutely wrong because take a look at what he had to say about Tesla 10 years ago during the IPO of Tesla. He said to sell Tesla and stay away from Tesla. Listen to what he had to say in 2010, basically over 12 years ago about Tesla.
See, Tesla's an electric vehicle maker, and I think this space is all sizzle.
And sorry about the quality. Obviously, this is 12 years ago, so the quality is not like today. You know, now we have clear video, but back then it was a little bit blurry. But anyways, listen to his sell signal. He was telling you to sell Tesla when it IPO'd, and that was a huge mistake. He was absolutely wrong on that.
Without any stage. This deal is a great way to make a quick buck or two, which is why I advocate trying to get in. But long-term, Tesla is sell block material. You're going to hear it on Thursday coming up. That's why I'm doing a very special sell block today. You get shares in the IPO. You want to sell them after the initial pop. Do not hold them for longer than that. I want you out the first day. How can I like the stock in the IPO, but not like it as a longer-term vehicle? Isn't that a little two-faced, duplicitous even? Nope.
So basically, he was telling you to sell Tesla on the very first day that it came out. And if you listen to his advice, you would have sold Tesla at $1.28 in July of 2010. So about 12 years ago. And from $1 all the way up to a high of about $407, you would have missed out on basically a 31,725% gain. And right now, Tesla is up about 13,500% since its IPO. So if you listen to him, you would have missed out on 130x from its IPO all the way to today. So that's another reason why you should not listen to this random person, Jim Cramer. Now, he thinks he's an expert, but actually, he's not a financial advisor. He does not even have his license to give financial advice, and he's still giving financial advice somehow. Now, this is a video in 2008 about Jim Cramer getting Bear Stearns wrong. Now, some of you know what Bear Stearns is. Basically, it was a big bank in the United States that went bankrupt and people lost all of their life savings in it. And a few days before Bear Stearns went bankrupt, listen to what Jim Cramer had to say. He was basically saying, oh, Bear Stearns is fine. Keep your money in there. Everything will be okay. Listen to this.
Okay, Peter writes, should I be worried about Bear Stearns in terms of liquidity and get my money out of there? No, no, no. Bear Stearns is fine. Do not take your money out. This is real. If there's one takeaway other than a plus 400 somewhere, Bear Stearns is not in trouble. I mean, if anything, they're more likely to be taken over. Don't move your money from Bear. That's just being silly. Don't be silly.
And then 6 days later, look at what happened.
Okay, just so you get a sense of what's causing the agony by this point, I know you've been talking about it. It's financials led by Bear Stearns after what essentially is a bailout from the Fed. Bear Stearns shares are down 90% this morning, and it's not just Bear. Pretty much every single bank is plunging in early trade this morning. Lehman, which is very similar to Bear and its reliance on fixed income, is down nearly 30%. You have big names like Goldman Sachs down 8%, Citigroup down 8%. So it is pain across the board this morning, and as you know, it all emanates from the shock this weekend that JP Morgan, along with the Fed, was going to be bailing out Bear Stearns for $2 a share. This is a stock that recently was trading at 80. Last year was trading at 160.
So from 160 all the way down to $2 per share. And Bear Stearns was at $60 when Jim Cramer, 6 days before Bear Stearns went bankrupt, Bear Stearns was at $60 and he was telling you, oh, everything is fine. Don't take your money out of Bear Stearns. And then it went down to $2 in just a week later. Like, you would have lost all of your money basically if you listened to this guy. Again, that's another reason why I am not listening to him saying that XRP is a scam, XRP is a con. Like, he has been wrong so many times in the past, and I'm definitely not going to listen to him. Now, another reason why you should not listen to him is because he was wrong on Facebook or Meta platforms. Listen to what he had to say. And basically a few months ago, about 7 months ago, he explained why he bought more stocks of Meta. Listen to this.
Money's been chasing novelty here for a while.
And keep in mind, Meta platforms was basically at $220 when he was saying, oh, I'm buying Meta.
Citi actually had an interesting deep dive on the metaverse a couple weeks ago where they said total addressable market 8 to 10, 12 trillion by the end of the decade.
Well, that's why my channel just bought Facebook. We bought some metaverse yesterday. I think that the way you're going to learn is through the metaverse. I also know that, say, Ralph Lauren, they're going to have a mall and you can go try on stuff and see how you look. Sure. I mean, I was at a very...
So that's why he bought Meta at $220, okay? And then he doubled down on that and saying that people that sell Meta right now are going to be very wrong. And again, this was about 7-8 months ago when Meta was trading at over $200. So listen to this.
Today, some good notes about Facebook and Reels. I continue to believe in my contacts in Facebook that Reels is going to blow everybody away.
He has contacts at Facebook and he believes them. That's why you should believe him.
And that this stock, which my Travel Trust owns, by the third quarter is going to put up great numbers. And people who are selling it now are going to be very wrong. I think that Zuckerberg has said that TikTok, look out. Reels is coming for you. And everyone debated whether you could have, where would Instagram be and where stories would be. And the answer is a win. He's been very close to the vest on the metaverse. A lot of people feel like, well, who wants to wear those goggles? Well, go to watch Jensen's.
So basically, he's saying that people that sell Meta will be very wrong. And Meta, since then, from about 6 months ago, is down basically 50%, okay? It was down over 50% just a few months ago when the third quarter, because he said that he thinks that the third quarter numbers are going to be very strong. But look at what happened to Meta during the third quarter. It went from about $137 all the way down. It fell about 35% in 1 week. And he was very wrong. He was very wrong on Meta or Facebook stock, okay? And now look at him crying, apologizing how he was very wrong on Meta, and he's very wrong on XRP. Like, keep this in mind that this guy has gotten so many things wrong, and that's why you should not listen to people like him 100%.
There was a recognition that there is a amount that you can't spend. Contrast that, for instance, with Jim Farley, who took a project that was his, Fargo, and closed it because it was not ready. It was not near enough. This situation is almost a rogue situation. I had thought there would be an understanding that you just can't spend and spend by your free cash flow. That there had to be some level of discipline, and I didn't get it. But David, what did I get wrong? I trusted them, not myself.
Aww.
For that I regret.
For that,
I've been in this business for 40 years. I did a bad job. I'm proud.
You're not alone.
Proud.
You're not alone, Jim. Morgan Stanley.
Like, basically, he's about to start crying because he was wrong on Meta or Facebook stock. And not only was he wrong on Meta and Facebook stock in the past year, but also take a look at this, because 10 years ago, basically, when Facebook or Meta first came out, he was basically against Meta, and then he started loving Meta, and he kept changing his mind. Like, he literally flip-flops on Meta all the time. So listen to this as well.
Simply irrational exuberance. And here's how he answered those questions.
No, and no. When you look at the facts, the bubble talk seems downright foolish. Facebook isn't the epitome of a dot-com era mindset that lost people fortunes 11 years ago. Not at all. It's a terrific company with real earnings and tremendous growth. Not page views and eyeballs. Eyeballs! You can analyze this stuff by the numbers. You don't have to be an ophthalmologist who can count how real the eyeballs are. Eyeballs! They're real eyeballs!
Okay, so while everybody's got to rush in, Jim Cramer is going to be ringing the bell. He's doing a lot of fun things. Everybody's got to rush into Facebook. In fact, he's not done yet. Let's let him go again.
Why am I so confident the anti-Facebook ballheads will be wrong? First of all, people may be excited about all the latest social media IPOs, and Facebook especially. But what's happening now is nothing like the insanity that gripped the market in 1999. Unlike a lot of the scolds out there, I can actually remember the dot-com era. I lived through it like almost no one else. Not only was I running my hedge fund, but I also founded an internet company that came public back then. So I'm more qualified than just about anybody else in this country to make this judgment. I am telling you, Facebook is a legitimate company. In fact, it's too legit to quit.
So he loved Facebook, okay? And then now, a few months later, watch this. He's going to hate Facebook because he's going to be like, oh, Facebook is done.
You go back and realize, well, wait a second, maybe this was like all the other social media companies that came public, which were, by the way, disastrous. We've got a company that's linked to social media.
So he literally just called Facebook disastrous in its early days when he just a few weeks ago in 2010, he was loving Facebook. He was saying, oh, this is going to be different. And now he's talking smack about Facebook.
We've got a company that's linked to social media that's going to be on our show later, Millennial. That was a disaster. All of the deals that have come have lost a lot of money for people, and this now seems like still one more of them.
He called Facebook another disaster, basically. And also, not only was he wrong on Facebook, on Tesla, on Bear Stearns, and not only is he wrong right now on XRP, calling XRP a scam, and Dogecoin, and these other cryptocurrencies, but listen to what he had to say about buying bargain basement stocks early in 2020. Actually, this was in December of 2021. So basically at the top of the market last year, he was telling you that, hey, we're already at basement prices that you should buy right now because these stocks are very off of their highs. Like they're down a lot, and that's why you should buy. Listen to this.
Single session. Now, there are plenty of names that are down big from their highs, but given that it's the first day of December, why don't we just go to the November videotape and examine some of the largest capitalization stocks that just got completely annihilated and people are giving up on? These often represent the biggest bargains, or at least decent, better entry points than just a few.
Okay, so big bargains. That's what he's touting these as. He's calling these stocks, about 3 or 4 stocks that you're going to see right now, as big bargains. That's why you should buy. But listen to why he was wrong.
A few weeks ago, all these are quality companies. It's not a single obscure company. Let's start off with some of the obvious names. And I'm going to give you, these are stocks that we have been buying for the charitable trust.
So basically, long story short, he calls out Disney, PayPal, MasterCard, and Win. Now, Win and MasterCard are doing okay, but when we take a look at Disney and PayPal, for example, this is PayPal's stock holdings, and from 1 year ago, because he basically made this call 1 year ago exactly on December 2021, okay, so 1 year ago today, basically, PayPal is down from about $190 all the way down to $75, which is basically a 60% loss on your money. Even though he thought that PayPal was at bargain basement prices last year in December. And he was very wrong on PayPal. Now also, Disney went from about $150, now is all the way down to less than $90, about $100, is down about 40% from his high in December. Okay, so he was wrong on Disney. He was wrong on PayPal. He was wrong on Meta platforms, Facebook. He was wrong on Tesla. He was wrong on Bear Stearns. When before Bear Stearns collapsed, he was telling you keep your money in Bear Stearns because it's going to be just fine. So that is why you should not listen to him on XRP. He has no idea what he's speaking about, and XRP will probably do just fine. And in the next few years, he's actually probably going to love XRP. Like he's going to go on CNBC and be like, I was so wrong on XRP. I'm so sorry. I love XRP. So that is why XRP is not a scam.